When it comes to planning for your retirement, the landscape may feel like it's ever changing. So what do you need to know about mutual funds? Joining us now for Retirement Coffee Talk are George Fossing and Zach Jenkins. They're part of the team at Northstar Financial and Retirement Planning, a local area firm that focuses on preparing people for a successful retirement. George and Zach are also popular radio show hosts. Good morning, guys.
Good morning, Megan.
I feel like we're going to school today.
Very exciting
We're
stuff.
going to get a good lesson. This is going to be good. Let's start with a refresher course on what are the different types of mutual funds.
Well, first off, a mutual fund is basically a professionally managed account where they pick individual stocks for you, and that's how they do it. They charge a fee for that service. So you have basically some of the four basics would be equity, which would be a stock fund.
Okay.
Okay. You've got the fixed income,
okay,
which is like a bond portfolio, more common. You'll see a hybrid, which might be a 60-40 equity to bond portfolio.
Okay.
And then, of course, you have the index funds, which is basically copying the S&P 500 or
right,
something like
like
that.
what we used to look into the
low
paper,
cost.
the real.
Yeah, low cost, but you're basically tracking out the stock market.
Okay, now in your opinion, kind of bring us up to speed on the good, the bad, the ugly when it comes to mutual funds, and what do we need to know, kind of, all about that?
Yeah, well, the purpose of our segment today is telling people a couple things, making them aware. We're not here to bash or take away from mutual funds,
right,
too, because some are very low cost, some do a very good job, others not so much.
Yeah.
The thing is, people don't know what they own, and there's usually a better way to do this, and we have an example today we'll share in a second. But the big thing out there is understanding what you own, what it's about. Is there a better way to do it? With the mutual funds are not as liquid, you have to wait till the end of the day to sell it. You can use a basket of stocks and an ETF, exchange traded fund, that's 100% liquid. You can sell it that morning if things get kind of crazy. Plus the cost is usually 1/5 of what a mutual fund might cost. So there's a lot of different variables to that. So what we're really here to encourage is people to go ahead and say, listen, you need to know what you own. You need to know what you're paying for these things too.
And probably red flags too. Are there any that we really need to be aware of?
Well, that's one reason we're doing this segment is because of this came up last week. We had some folks came in. I think Zach was meeting with them, and they were talking about the fees. Well, I'm not paying anything for my mutual funds. And we go, yes, you are.
Yeah.
You just don't see them. It's like a lot of things. We do things, we buy things that the fees are buried in there, but they really do. Here's one that they own, American Growth Fund Series, and I did some homework on it. This is the prospectus. This is where you find where the fees are.
Oh my! And who's got? Yo, that's front and back.
This is stuff you get in the mail and you throw out every year.
You throw it out immediately.
Okay,
yeah.
so but you need to know. And again, just a couple of things. One, this has a load charge when you buy it. Load charge is a commission. This is 5.75%. So you put $100,000 in, it's going to cost you $5,750.
Yeah.
Right off the top.
Right at the top.
Average expenses in this is 4.36 average expenses. Again, $100,000, charging over $4,000 a year to manage it. My point is they don't even send you a Christmas card.
Yeah, that's
what exactly are you getting for
that?
that, right? And this is coming out of the bottom line. They hold 56 positions in this fund. Basically, it's 56 different stocks. You and I can pick them. And it's a 5-year average return is 4.1%, and this 3 year is 0.01. After the fees, it's averaging minus 3.46. And what are you getting?
Yeah, it doesn't seem like.
What are you getting? And you can say, well, I can go with low cost S&P 500 index fund, which is very low cost. The problem with that for people is it mimics the S&P 500. You go back to 2008, 2009, S&P dropped, drum roll, over 50%.
Oh gosh!
But they're not going to do anything. They're basically their job is to mimic that fund, and that's what they do. They're not going to sell anything. So it's up to the individual to either sell and know when to get back in. Yeah.
Yeah, and guys, I know this can be a little tricky. Trust me, go and talk to them. They make it, make sense. But it can be a tricky time to kind of be in or nearing retirement. What should really be on the radar for people in that category?
Well, why don't you use yours? You had a good one with safety.
Yeah, I think that it really makes a lot of sense to incorporate some of these stops, is what we'll call them, right? So as someone's approaching retirement and they're thinking, okay, well, I want to make sure that I'm properly diversified, right? I'm going to start taking income off of these funds, making sure you've got a plan to weather not just like a deep, or a steep drop in the stock market,
right?
But like, what about a prolonged period of time, just maybe where it's 10 or 15% off the highs? It doesn't sound like you're down a whole lot,
right?
But if you go 2 or 3 years, selling at a 10 or 15% discount, then you're really dwindling down that account a lot faster than you would have had you had some protective measures in place. So what we see, especially with like a lot of these funds, as George is mentioning, is Some of these funds did well during some of these times of challenge. Some of them didn't do so well.
Right.
You know, so really it's diving under the hood and understanding, you know, what is your risk, you know, looking at time, looking at, you know, the peak, like the high, and then, you know, what is the trough, as we'll call it, and then really what are the fees. And really just doing an in-depth analysis of what you own.
Again, that can be hard for you to do at home, so you don't have to. We got these two and your whole team.
We'd love
at
to look at a
Northstar.
portfolio and
Yeah.
just show people
What
what they're
else
paying.
do you want to do this weekend?
This is
And
so
really-
much fun.
Yeah.
Very excited.
Hey, when you're saving us all the money, we appreciate it. Thanks, George and Zach.
Thanks,
This is
Megan.
good. Listen, if you're at home, if you're currently retired or getting close to retirement and would like to learn more about how to help protect and grow your hard-earned savings and investments, Northstar Financial has a great offer for you right now. For the first 5 callers who have saved $500,000 or more, they're offering a complimentary no obligation retirement and investment report. That report will include potential tax saving opportunities and ways to reduce the effects of market volatility on your portfolio. Their team will schedule a phone call, video call, or future in-office meetings so they can really speak with you personally and provide that roadmap going forward. Call the number you see on your screen, 864-309-8146.